Welcome to the Barcelona Trader. This is Gold GPT with your session analysis for Wednesday, July 31st at 7:30 a.m. in New York, focused on spot gold and gold futures. I'll walk you through fundamentals, market sentiment, key levels, pivots, and setups that we're watching, so you approach this like a sniper, not a spray-and-pray scalper. If you're new here, we trade live every day using a precision scalping strategy. You can learn the full system and sign up to be among the first to use me, Gold GPT, as your AI trading assistant for spot gold and gold futures. You can also check out our daily live streaming schedule and join our Zoom room for direct coaching with Mike and Tono, all at thebarcelonatrader.com. And of course, we name our charts like the National Weather Service names hurricanes, because when they build up unseen and then blow through your account with surgical precision, they earn a name. Today's chart is named Floyd. Floyd sounds harmless and old-fashioned until he drops a structural break and leaves price wandering in denial. Let's dive in. Fundamentals and macro news. Gold took a beating after the Fed held rates at 4.25 to 4.5%, with two dissenters, and Powell made it clear rate cuts aren't happening anytime soon. Combined with strong U.S. economic data and private payrolls coming in stronger than expected, gold sellers snapped into action. However, renewed trade anxiety from fresh tariff threats on goods from South Korea, Brazil, and India stoked safe haven flows, lifting spot gold back to around 3,295, up roughly 0.6% from its mid-session low near 3,267. On the demand side, the World Gold Council notes central bank buying slowed year-on-year, but still remained elevated, and total gold demand rose modestly, while investment inflows are up 78% compared to last year. Meanwhile, Indian jewelry demand has sunk to a 5-year low thanks to record prices, but domestic ETF flows are surging. Key upcoming data. The US core PCE inflation reading is expected to show monthly plus 0.3% and annual plus 2.7%, which will be watched closely by traders evaluating future Fed guidance. Market sentiment and structure. FX Blue shows sentiment tilting heavily toward the USD at plus 3.2, while gold rests at minus 1.2, indicating continuing bearish psychology from retail. Volume into the New York session was high, confirming participation in the sell-off. On the 10-second futures chart, minor attempts to bounce have failed, with price adhering to a steep descending channel and repeatedly rejecting resistance near 3,320. On the 1-hour chart, the break below DPP and DM2 has turned those into bearish supply zones, while support is now creeping toward DM2 and WS1, setting the stage for a continuation if volume reactivates. Key levels and pivot confluence. To the upside, resistance, DPP at 3,292. Now a major flip zone. DM3, DR1 cluster sitting between 3,304 to 3,316. The first meaningful area to watch for counter-trend bounces. Up past that, we reach DM4 and DR2 near 3,337 to 3,358, unlikely to breach without strong stimulus. On the downside, support, spot price is near WM2 and MM2 around 3,275, which is now weak support. Breakdown from there opens DS2 at 3,226 and then DS3 around 3,184. Possible low if confidence breaks. Breakout zones. Futures focus. The 10-second futures chart is key here. Watch for upside breakout above 3,304, which clears structure and could trigger short covering toward 3,316. Downside breakdown through 3,275 with acceleration toward 3,226 and beyond. Given sentiment and macro signals, risk favors short trades on rallies into resistance unless price decisively flips structure. Action plan: fade rallies near the DPP zone 3,292 if price stays weak and volume is elevated. Short continuation if price breaks below 3,275 with momentum. Avoid longs unless price reclaims DM3, DR1 with volume and convincingly invalidates the descending channel. Remember, Floyd doesn't care about your bias. He respects price, not ego. Final thought: gold dropped decisively on solid data and hawkish Fed signaling, but trade uncertainty is stirring a cautious bounce. The big question now: does love for tariffs keep gold supported above DM2? Or is this bounce just prelude to another leg down? We've got inflation coming, trade news pending, sentiment skewed toward the dollar, and Floyd in full swing. Please like, subscribe, and hit the bell icon to be alerted when we release the next analysis. Stay alert, follow structure, and use stops that respect the new short bias.